Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. Well, with the holiday and a day of no trading, I wanted to provide some updates. And this update is reiterating my bearish stance on the S&P 500. So with that, I'm not going to show you the long-term 20-year chart on the S&P 500. It has a 4.5-year negative divergence, which suggests at some point a correction the size of 2000, which had like a 2.5-year negative divergence. Um, is this that decline? I don't know that, but every time I see the stars line up on a short-term basis for a bearish stance, I certainly jump on that. So with that background, let's get into it. So this is a weekly chart of the S&P 500. Each one of these bars or candlesticks equals a week of price action. So coming into 2025, starting in April of 2024, all the higher highs gave us lower highs on our relative strength index. So it said that the underlying demand underneath the surface was waning and a change of trend is coming was flashing in the headlights. And so that's what got me bearish in January of 2025. And these are just some of the changes that I've made since then. So I went neutral. That was in early March. And then after a up week, I went bearish again at a higher price, which was good. And then went neutral after a big fall for 3 weeks, and then went bullish at pretty close to the low, and then went bearish again back in mid-April at a higher price, which is good. It was a little bit early, obviously, but I'm still in the money on this trade, and I still think that the stars are aligned for a bigger decline. So now we're going to take a look at just the daily chart. So it'll just be this part, the last 6 months. So each one of these bars represents a day of price action instead of a week of price action like the prior chart, the 3.5-year chart. This is I don't know, 7, 8 month chart. So again, here's where we went bearish, neutral, bearish, bullish down here, da 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 da. We had a rising wedge structure here off the lows, which we've now broken out of, broken out of, and not a good way. And rising wedges usually suggest that you're going to go to a new low. Will we? I don't know, but I'm seeing on a daily chart now a negative divergence. So this high and this high, this higher high, we got lower highs thus far on our relative strength index. Again, suggesting that the underlying strength of the market is waning from the prior high. So, um, here we had a negative divergence going into the top back in January, February. So we have the same kind of thing developing. Can that be rectified? Of course it can. If the market's up 1,000 points tomorrow on good volume and a good number of advancing issues, that could resolve this. But I don't think that's in the cards. So uh, maintaining my bearish stance on the S&P 500, I think it's a good place to short, to bet that it's going to go down, to protect yourself and some other equities. And thank you for watching Chart Built Wealth, profitable investing with technical analysis. Please like and subscribe. Invite your friends and neighbors and family to subscribe to the channel. I think the advice has been solid. Thank you for watching. Have a great day off. Good trading to you tomorrow. Adios.